If you've got an idea and an internet connection, well, you might already be in the midst of your own crowdfunding campaign. Almost 5 million people have backed a project on Kickstarter, the largest crowdfunding platform for widely different products and widely different reasons. But as crowdfunding draws bigger names and bigger amounts of money, what are the new ethics and opportunities? Should we be referring to donations or to investments? Well, here to discuss the professionalization of crowdfunding is Elliot Schneier, the co-founder and chief operating officer at Fundable, Joe Wallin, a lawyer who represents small emerging companies, and Liz Logan, a journalist who's covered the crowdfunding of technology projects. So guys, I want to thank you so much, first of all, for joining me. And Elliot, I want to start with you because you've worked in the traditional venture capital world. So what made you want to jump into crowdfunding entrepreneurs?
Well, it's a very exciting time to be an entrepreneur right now. I would argue that there's a confluence of some very important in-market events taking place. On one side, you have a notable surge of entrepreneurship. I've been doing this for almost 2 decades, and I can't remember when it was actually cool and sexy to be an entrepreneur. Now, that's becoming a reality. On the other side, you have...
So, Elliot, do you feel cool and sexy?
Not right now, not with this beard, and certainly not in Columbus, Ohio. However, it's on the other side, you have the compressed cost to prototype. So whether it's 3D printing or you're outsourcing, PHP development, you have the ability to now prototype in an effective manner. So you've got a tremendous amount of innovation. You've got a population that's constantly innovating. And I would argue there's very little parity in how these companies are getting funded. So what we've wanted to do is start to break down some of those obstacles and give entrepreneurs a better way to present and communicate their ideas.
Okay.
It's easier, and I have to say this, it's honestly easier to find out how to cook a paleo diet online than it is to start a business. And that's ridiculous to me because certainly starting businesses is one of the backbones of what we're trying to do here, right?
So yeah, well, absolutely. This is the interesting thing, right, though. So Kickstarter initially, when it was sort of first kind of, I guess, came into the public consciousness, came into the ether, was almost designed to be for small little projects and, help me finish the end of my budget at-home film, or help me put on this dance show that I've got all these kids here that want to put this on, I just don't have the money. So, it seemed to be a little bit more sort of very local. And then now we seem to have kind of entered this realm where it's much more big business. It's much more industry based. Liz, tell me a little bit about that. What kind of shift are we seeing here from the kind of small local Kickstarter-y sort of idea to this kind of slightly more grand notion of what crowdfunding is?
Well, it's definitely changing a lot. People are raising millions of dollars on these sites. People are trying to fund high-tech hardware projects that are very high risk. And if they're out looking for money, chances are they're young people who maybe just graduated from school, or, they have a limited amount of experience. So it's tough for people to know what they're backing exactly. You have to be really smart, and you have to really look at who's doing the project, what they're attempting, how transparent they are, because you're in some cases giving a lot of money and you may not see a result. They may not be able to pull it off.
Well, that's a really good point, isn't it? Because Oculus Rift, let's talk about an example. So they created a controversy when it sold to Facebook shortly after raising money on Kickstarter, and the backers didn't get any of the windfall. And I've got one of the tweets here where John Malloy said, I helped out Oculus get sold for $2 billion, and all I got was this lousy T-shirt, and there it is. It's a pretty T-shirt, but if you're expecting to have some kind of stake in this business, is that the way that the system is supposed to work, though? That, you put in a little bit of money and then a company goes absolutely stellar like Oculus Rift, and then you don't see anything from it?
I can comment on that. Oh, I'm sorry, please. Go ahead, Liz. I think it's important to kind of call a lottery ticket what a lottery ticket is, and Oculus Rift is exactly that. But when we think of crowdfunding, we try to break it down into 3 categories. Category 1 would be those lottery tickets where an investor has the ability to bet on a high growth company. Category 2 would be, and you're seeing more and more companies go into things like real estate crowdfunding, which is IRR based. So you're saying I'm going to put in $100,000 and my expectation is to get a $10,000 return. So that's just really an alternative investment vehicle. And then the third, which is really important to us, is creating a better mechanism for the new Main Street to use socialization to launch breweries and boutiques and bars and businesses of the like.
So Eddie, I'm curious on the other end of the spectrum, though. My question really is more about the consumers. So how do you advise people that are kind of crowdfunding to manage the expectations of those who are backing them? Because, obviously, you don't want the tweets, as John Malloy had put out there, that all I got was this and I expected, if it was going to do that well, to get a little bit something more.
Here's what's interesting, and we're learning this very quickly. You only need to do so much to signal. Right. So if they would have sold $100,000 of product in 3 days, would that have done as much as, I'll use Hidden Radio as an example, 2 $1 million crowd funds? Because what's happening in market right now is a lot of these great product companies are doing $2 million in pre-sales, and then their cost of goods sold is 90%. So they effectively have no dry powder to grow the business. And we call it here the crowdfunding anchor. All of a sudden, you've got $2 million worth of widgets to deliver. But really, the only reason you were crowdfunding is to test demand in market so you could go out and grow your business. At Fundable, I'll give a little preview. In about 2 weeks, we're to go to market with a hybrid raise, which will allow backers to either invest in the company if they are self-identified accredited investors, or have the opportunity to buy the product. So the bet here is that entrepreneurs only need to signal just enough to authenticate demand, and then give investors, a la Oculus Rift, the opportunity to see that scoreboard up in lights and buy a piece of that company.
So, one of the difficulties, I guess, around this is that there's not really very much regulation. Some people might see it actually as difficulties, and others think that this is why it's so beautiful and why there are so many businesses flocking to kind of crowdfund to start that way instead of going a much more traditional route. Let's talk a little bit about how government is involved. Senator Mark Warner had this to say, for instance. He said, quote, "I don't think it is possible to know everything about how this market will function right now. The best thing we can do for investors and the public is to set fair and reasonable rules that everyone has to follow. There will inevitably be some problems along the way, and the SEC needs to stand ready to address issues in an appropriate and timely way." So, Joe, talk to me a little bit about regulation as it stands and where you see maybe the importance of tighter regulation in the future.
Sure. Well, I think it's important to note that. Sorry, can you hear me?
Yeah, we can hear you just fine. Yeah. Oh, we could hear you, Joe. Now we can't hear you. I'm not sure what happened. Did you click?
I'm sorry.
There you go. We can hear you
sorry.
fine.
Sorry. I think it's important to note that the reason why companies aren't equity crowdfunding right now on portals like Kickstarter to the public at large is that the law prohibits it. So we've had the we had Congress pass a crowdfunding law, and then we've had the SEC unable to finalize the regulations for 2+ years. But the underlying legal regulatory regime right now prohibits equity crowdfunding to the public at large. And so when you talk about, well, gee, people didn't get to participate in Oculus Rift and wasn't that a bad deal, the law prohibited them doing equity crowdfunding. And so what we need reasonable regulation. I agree with that. But I personally don't think the law that Congress passed is reasonable. I think it's too burdensome.
Why don't you think it's reasonable?
Well, if you actually read what the Title III of the Jobs Act says, you'll realize that most companies are going to find it too costly to do a Title III equity crowdfunding raise. The law lays down, myriad regulations, and it's going to cost. There have been estimates that to raise $1 million in Title III equity crowdfunding is going to cost something like $250,000 in regulatory, legal, and accounting and compliance brokerage fee costs. That's the government is, first of all, it killed it. It wouldn't allow it to happen through regulation, and now they're trying to open the door a little bit, but it's still going to be so expensive, it's not going to be realistic.
It's really interesting, Joe, because I'm looking at one of the headlines here from Forbes, for instance. It says, Jobs Act Title III, investment being democratized, moving online. Liz, what do you think about that? Has the Title III actually helped, or is it potentially going to hurt smaller businesses or smaller would-be businesses from being able to kind of crowdfund, get the right investment that they would like?
Well, it remains to be seen what the rules are going to be. But you're still going to have that, what we have now, which is Kickstarter and Indiegogo, where you can fundraise on the donation level, which has been fantastic for people. People have raised a lot of money. They've brought films to Sundance. They've, done the Veronica Mars movie and many other museum projects, all kinds of things. So there are going to be more options, and that's going to be helpful.
Well, one of the flip sides of this as well, of course, is that with greater legalese in terms of regulation, you get things like this, a lawsuit. The first state is Washington State lawsuit over a crowdfunding project is about a deck of cards. The kind of case aside, the fact that they're getting, lawsuits so swiftly on from this regulation. I mean, Elliot, what do you think about that? Does that make people a little bit nervous, especially if you're just entering kind of crowdfunding for the first time? Does that make people nervous?
Well, the good news here is, you're dealing with a population of early adopters. And in this situation, the early adopters are responding appropriately. So there are companies like Dragon Innovation introducing certifications on manufacturing to say, hey, we can actually deliver what we say we can deliver. You can trust us. So despite all the outside regulation, there's some intrinsic regulation that's taking place to crowdfunding. Just like people want the ability to invest in an Oculus Rift, and crowdfunding companies are pivoting and listening to exactly that. There are other businesses that are pivoting and listening to, wow, maybe some of these companies need to get some third-party certification to say, yes, if you order this widget, it's going to end up in your mailbox.
What about the ethics of all of this? This is an interesting comment I've got here from Kim Beasley, one of our HuffPost Live community members, who says if a business or a person receives money from a crowdfunding project, then they should deliver everything they promise to the donors. There needs to be stronger mandates to cover the donors better. What do you think about that, Joe?
I think there are adequate provisions in the law right now to protect donors. I mean, as you saw in Washington State, the people who didn't deliver are suffering a consequence from that. And I think existing laws are adequate. I think when it comes to equity crowdfunding, there's a lot of hand-wringing about it right now, but it doesn't even exist yet. I think we need to let it exist. We need to let it run it, have an experiment, let people invest their money. There are caps in the law that limit the amount that people can lose. These monies almost entirely go into creating jobs. And so we need to ask ourselves, hey, what are we trying to do in this society? Do we want people to innovate? Do we want people to give people the freedom to create jobs? Or do we want to regulate something that's really astounding out of existence and not even let it exist? I think we should let things go and see how they turn out.
If you would have said 15 to 20 years ago that people are going to be able to sell effectively their junk online and somebody on the other side of the country was going to pay them for it, you would have said you're crazy. But I think eBay has fully disproved that. So point being, I think technology is nimble and people will regulate. My only other comment is we often associate crowdfunding as being this incredibly new way businesses get funded. Businesses have got funded through crowdfunding, pass the hat style funding for the last 80 years, whether it's a restaurant or a widget and you're getting friends and family money, it's just been far less efficient. And crowdfunding as a whole, again, is giving you a better platform to present your idea and communicate your idea.
Can I make one final comment?
You have to do it in 30 seconds. We're running out of time. My producer will kill me. So
okay, my last comment is I would just ask us all to not let the fear and the uncertainty and the doubt or the FUD get ahead of us here. We have a great opportunity. We have the internet, which gives us the ability to communicate and to share ideas and to evaluate and criticize people and publicize people who fail. I think we need to let this go so we can really see the dynamism of the American economy take off.
I love it. Ringing with hope to the last breath. Fantastic. Guys, it's really great to have you, Elliot, Liz, and Joe. Thank you so much for joining me today on HuffPost Live. And I'm sure we'll continue this conversation. It's fascinating. But guys, if you want to check out any of the links that we've been discussing, any of the business we've been discussing, you can do so. Of course, all the links are in the resource well below this player. Stick around. More HuffPost Live coming up next.